Meme coins. Some believe that they're the most exciting part of crypto. Others would argue that they're the worst thing to have ever happened to the space. Whatever you think of them, their parabolic growth has made one thing clear.
They're not going away.
And we shouldn't ignore them. So, when we saw a report all about meme coins, we knew that we had to cover it. Today, we're breaking that report down for you in simple terms, telling you what's been going on with meme coins and what this could mean for the broader crypto market. My name's Lewis. Now, let's dig in. First though, nothing in this video is financial advice. It's for education and entertainment purposes only, intended to inform you about a recent report about meme coins. If you find content like this helpful, then do us a favor by punching that like button. It really helps us out. And if you're looking to trade meme coins, Axiom is a great way to do this. It's a meme coin-focused trading terminal that connects to top dexes and launchpads, giving you everything that you need to master meme coins in one convenient place. Not only that, but you can even earn crypto just for using the platform. And if you sign up for Axiom using our exclusive deals link, you'll get 10% cash back for life and a 2x multiplier to earn that crypto even faster. Just click the link in the description or scan this QR code, which will take you to our exclusive deal. Click that sign up button, then simply create an account using your email, Google account, or by connecting your Phantom wallet. You'll see our referral code automatically applied. Deposit some SOL, start trading, and enjoy those sweet rewards. This deal won't be around forever, so take advantage while you still can. Now, on to the report. The report we'll be summarizing today comes from Galaxy Research, and it's titled, quote, "The State of Meme Coins." As always, we'll leave the link to the full report in the description below for your convenience. But we'll be giving you the juiciest bits right here in this video. The report starts by looking at the size and scale of the meme coin market. There have been over 32 million tokens launched on Solana alone since the start of 2024, a feat made possible by the pump.fun launchpad. If you've been in crypto for more than 5 minutes, you'll know that pump.fun made token launches easier than ever. Prior to pump.fun, creators had to manually code tokens and parameters, and teams had to supply enough liquidity to make them tradable. Pump.fun removes these complexities, allowing anyone to create a token without any coding and launch it on a bonding curve at minimal cost. Paired with Solana's speed and low fees, it's no surprise that the degen floodgates were thrown open. What might surprise you, though, is that while Solana had dominated in terms of token launches, it's actually BNB that's captured the most spot meme coin trading volume. This is thanks to launchpads like 4.meme and, more recently, AsterDex, whose hype had been driven by none other than Binance co-founder Changpeng Zhao, better known as CZ. You can learn more about Aster using the link in the top right. But back to pump.fun. Even though it remains the dominant launchpad, bonk.fun briefly took over its market share twice. The report describes the launchpad space as hyper-competitive, with new entrants using varied tactics and incentives to fight for a piece of the pie, even if these fights are often short-lived. Of the 32 million tokens launched on Solana, around 13 million came from pump.fun. No other platform rivals it in either token launches or fully diluted market cap, also known as FDMC. At the time of the report, pump.fun tokens had a FDMC of 4.8 billion, although this is less than half of January's peak above 10 billion. The report then highlights two undeniable truths. Meme coins are too big to ignore, and the sector is highly concentrated. As the author notes, quote, "Solana dominates other chains. Pump.fun dominates Solana, and among pump.fun tokens, a vanishingly small fraction of tokens account for the majority of value." Intriguingly, though, data from Blockworks shows meme coin's share of total DEX volume has declined over the past year, suggesting attention is shifting to non-meme tokens. While meme coins once made up over 50% of Solana DEX trading in Q4 last year, they now account for just 20 to 30%, lagging behind other token swaps. And the reason is simple. Oversupply has fragmented liquidity, limiting the parabolic growth seen in top memes of late 2023 and early 2024. Along with competition from on-chain apps like Hyperliquid's perpetual futures, overall meme coin volumes have dropped in a big way. Next, the report examines the on-chain behavior of the meme coin ecosystem. Right away, it notes that, quote, "What stands out most is just how short-term scalpy, and power law-driven the trading is. The report then looks at several indicators along these lines, starting with holding periods. Among Solana meme coin holders who bought and sold within a week, the median hold time had fallen to just 100 seconds. Not hours, seconds. Moreover, this is actually down from nearly 300 seconds a year ago. It's like a PvP battle of the most paper-handed. This isn't necessarily due to a lack of conviction, though. Rather, it's the result of infrastructure that makes rapid trading easier than ever. Axiom, for example, literally offers an instant trade feature. Degen scalpers can trade on 1-second candles, suppressing prices, triggering panic selling, and creating net losses for almost everyone. Well, everyone except project insiders, that is. Next, the report explores the power law, phenomenon where most outcomes come from a small group rather than the majority. Also known as the 80-20 rule, it's seen in many areas of life, such as 80% of the world's GDP being held by 20% of the population. When this law is applied to meme coins, the results are truly mind-blowing. Of the near 13 million pump.fun tokens, just 12, yes, 12, make up for over half of the FDMC. For context, that's 0.00009% of all tokens launched on pump.fun. The report compares this ecosystem to a lottery, and frankly, it's not a harsh comparison. Almost every token fails within hours, with only a tiny fraction gaining enough attention for meaningful gains. Yet, despite this shocking statistic, the sheer possibility that a token could rally fuels rampant speculation in the meme coin casino. Like a real casino, exchanges and trading platforms rake in millions as people gamble away their savings. Remember, folks, the house always wins. The report then describes what it calls, quote, the meme coin stack. Essentially, it describes the meme coin ecosystem as a stacked series of layers, each one fueling the next. At the bottom is the underlying chain, Solana, Base, BNB Smart Chain, etc., with Solana being the most active for PvP trading and gambling. The next layer is the crypto launchpad, like pump.fun, bonk.fun, 4.meme, Believe, Heaven Dex, and others. Pump.fun leads thanks to first-mover advantage and its innovative bonding curve, though the Launchpad market overall has proven to be a winner-takes-most market. Launchpads then feed into the third layer, which is DEX aggregators and automated market makers, or AMMs. Pump.fun has its own native AMM called PumpSwap, while broader price discovery happens on platforms like Jupiter, Radium, and Orca. And by the way, you can learn more about these DEXs and Launchpads by checking out this video right over here. DEXs and AMMs then provide the space for the fourth layer, trading bots and automation. These execute trades at breakneck speed, letting users quickly snipe newly launched tokens. This drives those median hold times down to mere seconds and makes it extremely difficult for ordinary traders to make a decent profit. Regardless, though, this activity paves the way for the fifth and final layer, the community. Mostly found on X and Telegram, this is where groups of meme enthusiasts frantically shill their favorite projects to pump their bags. As the report explains, quote, communities are incentivized to push their token higher with collective belief substituting for fundamentals. KOLs, or key opinion leaders, wield major influence here. If a KOL signals to pump or dump a token, their communities typically follow. Now, the next part of the report looks at what it calls the, quote, creator capital market, referring to the emerging world of creator coins. These tokens allow creators, celebrities and influencers alike, to monetize their content in innovative ways through tokenization. The authors highlight Pump.fun's latest upgrade, Project Ascend, which was announced in early September. It lets content creators use tokens as direct monetization channels. Notably, this news marked the kickstart of a 2-week rally for the Pump token. Project Ascend uses an interesting trading fee scaling model based on the project's market cap. Basically, creators earn a higher percentage of trading fees from smaller tokens to fund early growth, with the percentage decreasing as the project's market cap rises. But this isn't Pump.fun's only development. There's also been a surge in the number of streamers using the platform to launch tokens of their own. The report highlights 3 benefits that creators gain by doing this. The first is that engagement is greatly enhanced. Creating a crypto token incentivizes viewers to interact with both the creator and the community. And of course, early participants benefit most as the creator's popularity rises and the token price moves up and to the right. The second benefit is that these incentives can help creators go viral. Token holders promote the stream, effectively providing free marketing. And the more the community spreads the word, the more that they benefit. The caveat is that some have used extremely dark and disturbing methods to promote pump.fun streams. Too extreme to go into detail here on YouTube. This even led pump.fun to shut down its livestream feature last November, before quietly bringing it back in early April. The third benefit for streamers is that they can reshape their economies. That's because streamers can earn far more from token trading fees than from traditional ad or subscription revenues on platforms like Twitch or Kick. And if you want to learn more about this emerging narrative, then we actually have some good news for you, because we actually did a video diving deep into social tokens and the creator coin economy. And you can learn all about that by checking out the video right over here. And now this brings us to the inevitable part of this report, the risks. In the author's words, quote, meme coins carry a unique set of risks that differentiate them from other assets in crypto. Ultimately, these risks reinforce why most market participants tend to stay away from meme coins. If you've spent any time in the trenches, you've likely seen these risks firsthand. Many tokens face smart contract vulnerabilities, making them prone to exploits, especially those launched outside of a standardized launchpad. Sometimes, though, smart contracts are flawed because they're deliberately designed that way. The most common risk for meme coin traders is the honeypot scam, where tokens can be bought but not sold. These charts often appear to move up only, with very few sales, misleading experienced traders to thinking the token is going to the moon. Investors ape in only to find their funds stuck, hence the name honeypot. On paper, you've made 100x in 5 minutes, but in reality, your funds are lost. Then, once the scammers feel like they've extracted enough value, price collapses. This relates to another constant threat, the rug pull. Even if a meme coin isn't a honeypot and trades freely, traders can still get wrecked. Project insiders often hold large token allocations, sometimes hidden across multiple wallets. These insiders can then slowly rug the project by gradually dumping tokens on retail investors. Or, if liquidity is managed manually, these lowlifes can rug it instantly by draining the liquidity pool, meaning that even the smallest sale will slam the chart straight to zero. Another risk for meme coins is the vampire attack, where a copycat token gains enough attention to overshadow the original. This type of attack is usually made easier by project insiders and paid shillers. This also puts traders at risk. Even if they identify a trend before it takes off, they could inadvertently buy the wrong token. And as you've probably already guessed, the final risk is regulatory scrutiny. Even with the more lapsed approach of regulators in the US, the reality is that there's very little separation between harmless gambling and retail exploitation. And it doesn't help when high-profile exploits occur, like the Libra token promoted by Argentine President Javier Milei. Thankfully, you can avoid falling victim to these scams by following the rule number 1 of being a crypto investor. Do your own research. Verify that there are plenty of holders, sell orders, and liquidity, and check that the liquidity is locked. You can also check social media comments, read reports, and do small test transactions. Anything to keep your crypto stash safe. And the final section wraps up by offering some perspective on the outlook of meme coins. The report points to meme coin evangelist Murad, who describes the structure of the meme coin ecosystem as resembling a 3-layered pyramid. The base layer, making up the largest proportion, consists of millions of microcap shitcoins with no barriers to entry, minimal community, and heavy PvP trading. The second layer includes fewer than 15 tokens, each around for at least a year, with dedicated diamond hand holders, active developers, and the resilience to survive dips that typical meme coins can't. The top layer includes just 1 to 3 meme coins, the cream of the crop. These will have over 2 years of development, a dedicated maximalist community, real people behind the project, a dollar-cost average culture, multi-cycle appeal, the most committed diamond hands, and a clear, measurable roadmap. The report concludes by saying that while meme coins are akin to a literal casino, they also serve as a stress test for blockchain infrastructure. That's simply because when meme coins hit their peak mania, the supporting blockchains and platforms are pushed to their limits. An example is the launch of the Trump meme coin earlier in the year, which got so much attention that it actually caused Jupiter to record more than 42 million failed transactions in a single weekend. Crazy stuff. And with that, we've reached the end of this report, and we'll remind you that you could find the full thing in the description below. For now, though, there's just one more question remaining. What does all of this mean for the crypto market? Well, if anything's clear from this report, it's that meme coin trading is riskier than ever. But it won't stop new retail investors from believing that they could buy some stupid meme coin and become a millionaire overnight. Meme coins are notorious for introducing normies to crypto. But this is a double-edged sword, as few of these stories end well, a reality that will become increasingly clear over time. Something else that's clear from this report is that the interest in meme coins is slowly starting to fade. This is bad news for meme coin degens, but good news for the broader altcoin market. That's simply because once traders start feeling that aping into memes is a lost cause, they'll likely turn to other avenues in the hope of making outsized gains. These traders can either opt for altcoins with larger market caps, since they're more likely to reach new all-time highs, or they could go for smaller altcoins that have more risk but more potential upside. Either way, though, the extra money flowing into the altcoin market will be welcome news for many of our backs. One area that seems to be slowly gaining traction, though, is the creator coin economy. From our perspective, this narrative could go one of two ways. Either it fails to take off, or it suddenly explodes in popularity. The recent launch of Project Ascend by pump.fun could give it significant support, so definitely something to watch closely. Whatever meme coin narrative takes off, though, crypto infrastructure will need to adapt and evolve in order to keep up. This will result in better systems and protocols across the board, greatly improving the user experience and fueling the broader adoption of crypto. So yes, meme coins are tarred with the reputation of a Wild West casino. Many are based on nothing more than whatever funny thing was trending on Twitter that day. Most will go to zero, leaving traders holding the bag. But as flawed as meme coins are, they might also be one of the most important sectors of the crypto industry, even if most of us will stay as far away from them as possible. Okay, so if you want to learn more about how to use Axiom, then check out our video on that right over here. And if you want to learn more about why Sol could rally in the coming weeks, well, check out our video on that right over here. Thank you all so much for watching, and we'll see you again in the next one. It's Lewis, over and out.